would have been nice, but we're not technically at my 50-day. And if we have some follow through, zooming out for a moment, taking a fib from this low in April to this high. And here is a 23, a 30, a 38%. Somewhere in here is where I'm hoping the market can kind of settle in for a retracement. So this could be a lot of noise this week. I wouldn't be surprised if the market is, trading inside of this massive candle. We essentially gave up 1 month of gains in one candle, and might be a little bit more difficult to reclaim the highs right away. So, anywho, that's where we're at for this morning. News-wise this week, I think everything is tentative from what I see. Everything now China focus is coming out with Scott Bessent's talking points versus Trump. Trump is now talking mostly about Gaza and peace in the Middle East. So everything on China right now is Bessent. I don't know if that's because it was so noisy on Friday that it's like, I'll take it from here. I'll take point from here. But here's the weekly news. I don't think we don't have any CPI, PPI data, all tentative on Thursday again. Doesn't look like we're going to have any resumption of U.S. Data. So another week kind of in the dark, labor-wise, in the dark, inflation-wise. Powell speaking 12:20 on Tuesday. What is that? Moderate discussion, economic outlook, monetary policy, National Association of Business Economics annual meeting in Philadelphia. Okay. So we got Powell on the calendar. Last week we had FOMC minutes. That was pretty canned. Not much happened. All the excitement last week was all on Friday. I'm happy to say that we just had a very typical daily profit play. So we took the trade in the morning and we got what we needed. We grabbed our 30% profit and chaos. Right through the 21 period moving average and coming down towards that 50-day. Markets are going to be opening up here in the middle. So if we go to SPY, okay, those blue lines represented our highs and lows that we needed for our daily profit play last week. Perfectly in the middle, got paid. I'm hoping nobody tried to be heroic and try to call the bottom. Last week we had such a crazy move. It exceeded my VIX box, which again, it rarely happens. Exceeded the VIX box and exceeded the 200-day moving average. So we had this as a previous day's close, blasted through, the downside. To me, it was interesting. I was, kind of kicking around the idea of like, well, maybe 6,600 be kind of the bottom of the day. That'd be like through the 200. That's a round number, blah, blah, blah. And then I looked at the 50-day and I'm like, well, maybe 6,550. We settled at 6,252. I was going to put on a broken wing butterfly, but I was not in the office on Friday. So that's why I didn't take the trade. I had lots and lots of out of the money credit spreads. I'm like, it just seems like one of those days where this correction has been needed for a while. This ventilation in VIX has been needed for a while. I mean, the VIX got up to 22.5. It's up to 20. I mean, it's still elevated VIX. So without any major U.S. news, I just literally last night I was thinking, if we go right back to the highs on Monday, Tuesday, this is some of the wildest, most manipulative BS I've seen in my entire career. Like COVID was crazy. Brexit was noisy, but my gosh, we're talking about, one person that has the power to move, influence, disrupt the markets. It's insane. So we'll see what this week gives us. But I don't know. It's just like this shouldn't be how corrections happen. But you know what? It is what it is. And this is what we sign up for. This is the challenges that we embrace as traders. So let's, own it. All right. Daily profit play, Johnny. That is one of the trades I take on a daily basis. Looking to generate some premium. So today, by the way, Macro Monday today for the daily profit plan. I'll be with Kane this afternoon at 2 p.m. for the Gamma Report. We had a great session last week. Had a lot of fun. I'm looking forward to dissecting the markets and going top down with him on Mondays at 2 p.m. So I think we'll have a link to that. Again, I'll share the same one. It should be the same registration link. But I'll make sure that's in my Telegram and I'll share it here in this Zoom chat. Okay. This week, What I'm looking forward to, waterfall income is going to be a great class today. We're going to have, with the elevated VIX, we're going to have an excellent trade. Because the market is up off those lows pretty healthily, I'm going to probably do a strategy 2 today. But we also took a trade last week during the master classes. We did a 2-day masterclass workshop in waterfall income on Thursday and Friday. Anyway, we'll take a look at it today. But really good looking trade on Friday. Pinch point scanner. We'll dive into the scanner this week. We did throw a new trade in crash insurance. If the VIX stays elevated, if we do see some fresh lows this week, even we don't have to stay there. Even if we just poke fresh lows, I'm probably going to take some profit on my November VIX trade that we did here in this session. And also I threw it out officially as an alert for my crash insurance masterclass. Because of the sell-off on Friday, I also tossed in a premium trade on Project Options Edge. I think I pulled in like $1.30, $1.35, and I went all the way back down to April lows with the SPY. So it's essentially like $1,000 profit trap ratio spread. All that means is I'm giving myself lots of room for error. If I took any ownership of the S&P, it would be the SPY, and it would be at like $465. And the probability of profit on that's like 99.5%, and it's out to the end of the year. So great trade. I think high probability income trade, $130. And if we need it, we're going to have a big fat like profit hedge as well. So combo trade there for Project Options Edge, but I put that in as everything was dumping on Friday, and that's kind of what allows me to when we finally have the VIX moving for the first time in a while. Speaking of VIX, I actually read about this weekend. Let me see if I can find. Is it VIXE? Let's see if there's equities volatility gauge. So there's VIX, VIX, VVIX, Move Index, PCE. I was looking at something on Bloomberg this weekend where there was like an equity-based index. I'm not seeing it here on TradingView. But what I found interesting is we have seen a very quiet VIX for the last, well, I wouldn't say quiet. I would say, between 14 and 16. Well, yeah, that's definitely quiet because the market's been making highs, but the VIX wouldn't go down. So what we started to see in the background, and this actually started to show some kinks in the private equity market back in middle of September, late September. Tricolor and First Guard or First something. There were 2 private equity plays that were now being investigated for like $2 to $4 billion in fraud, and we're starting to see that some of the credit spreads were widening a little bit. So this is all bubbling under the surface, but we did not see it in the S&P. The S&P continued to sit here, melting up the highs. We hit a fresh high last week on the S&P, in fact, right? We had those like 6 days of nothing, even though the market was just carving out these slightly higher highs, but 6 days of nothing. 1, 2, 3, 4, 5, 6. And all of a sudden, Friday. So anyway, it's going to be an interesting week, to say the least. I would still like to see price continue a bit lower. So if we have based on high, low, let's say today is a middle candle where we just kind of stay in the middle and it's noisy. Do we proceed to retest the lows? Is that a buy the dip opportunity at the 50-day? We will find out. Let's keep an eye on the bond market today. That was one thing that did catch a nice bid last week. Bonds were up as a response to that risk-off trade in the equities market. So bonds catching a pretty nice bid. That's a lot different than Liberation Day when bonds were breaking. So bonds got a bid around 1.62. Did that drop the U.S. 10-year aggressively? Yeah, pretty much. So bonds down, 8 basis points or so, or yields down rather. I still want to see, are we going to get back down to, put a chart alarm here. I will put in, this is post, well, I'll put Liberation Day lows. Post Liberation Day lows for 10-year yield. We will see. Okay, bonds closed. I think bonds are closed today. Yes, I think equities are open. Bonds are closed. It might be a lighter volume market. Let's check some key levels. So close at 65.52. Let's update the 65.52. Update the box. VIX at 20. This is, let's see how wide this thing can go. That is a move of 1.4. It's probably about right then. So 20.23, 1.26. Okay. So I've got VIX box highs and lows. I mean, sure, if we could sell this high, it's crazy that the VIX box is, right in here between the 150 and the 200. Usually we see it kind of topping out. This is my shaded zone in the background. Usually it tops out right around this 150 ATR, but because of Friday's kind of blowout move, VIX high, VIX low would be pretty much at the 200% ATRs. 1.26 is what I'm getting with current VIX at 20. I think the VIX is probably going to retreat a little bit. Doesn't mean I necessarily want to be buying the dip today. Doesn't mean I want to aggressively. It's like I don't want to be in the market in the noise. I think this is a very noisy window. We should be taking advantage of this higher volatility. Hopefully, the plus minus on the day is quite large. Let's find out, actually. So today, let's go SPX positions. Take a look at Adobe. All right, SPX for the 13th. There we go. So, oh my gosh, this is nuts. Oof, look at this thing. 31.7 implied volatility, 30 IV rank, and 86.56 points in the day. That's not a nothing burger, that's for sure. 86 points on the day, plus or minus, which means that we should, let's go 86 points. 86 points. I mean, we should be able to sell. We should be able to sell like 100 points wide for our kind of mechanical. If I'm going to go 5 wide, pulling in $1, I think one thing I certainly want to do today is not take a lot of risk. Okay. I don't want to take a lot of risk. So again, we can define that risk. We can cap that risk. I can go, I don't know, maybe we can get lucky at like 120 points out of the money. 100, I don't know, probably not 150. But I will say that, this is where we closed on Friday. We closed here on Friday. The market's opening up about 1% higher, maybe slightly more, right? Futures up about 1.227. We sold off 2.7. So we're chewing into that a little bit this morning with the futures market, rapid response plus the kind of the pivot and the tone with Trump over the weekend. So could we end up selling, VIX box highs? Sure, maybe. But I think what's going to be disruptive about today is this is where we closed. We're opening up somewhere in here. I don't want to sit here and say like we can't go higher than that because the Friday closed. Au contraire. If anything, it's like based on the open today, let's go the plus or minus 90 points and see where that gets us. Right. So I mean, again, it could be one of those days where it's like it just seems crazy and chaotic. Market makers would obviously be shoving risk from Friday over into today. So if they were stuck offsides, off guards, volatility above 20 means that we are no longer in a positive gamma environment, right? Here are the big levels. So, 65.50, if this is for today and we're opening up way up here, does this flip to green? Does this flip to green? And for 0DT, does it stay green? I have no idea. Like this is a total wild card type day that what we should be doing is defining risk, trading small. If this is a little bit too much volatility for you in a 0 day, then don't trade it. We did trade the stuff back in April, like all the chaos that happened in April, all the news, all the Liberation Day stuff, all the tit for tat, all the announcements. We ended up having like 38 trades or 40 trades out of 42. We had like 2 or 3 losses in the entire month. And we had a ton of winners. We had like 91% winners, even during some of the crazy stuff we've seen in a while. So I would put, that kind of 1 day blowout move it's right up there with some of the craziness we've seen in 2025. But the nice part is market makers aren't stupid. They are smart. Look at this. This volatility has instantly changed. This is 4 times the volatility that we were seeing in the last couple of weeks when it was like plus or minus 20 points. Did your downside daily profit play option spread capture any of the awesome Which one? I mean, all of my broken wing butterflies were profitable. What was a bit of a disappointment for me is I ended up rolling. I mean, I explained this all in Telegram. I ended up rolling two of my trades that were in a bit of trouble, and this was, I mean, as the day was unfolding, I was like, I think this market might finish below 66.40 for the day, which is where I needed it to. Um, so anyway, I come back to those trades today, and we have an entire week. So what I'm looking for is maybe if we retest the lows. The nice part is this close on Friday was 90 points below my bear call spread strike. So the fact is we're going to be opening up around those levels today, maybe dance around. But I mean, if this is just, let's just say good old fashioned price action, high to low, pull back into some type of fib level, the market should either come back and retest for a higher low, and that's the buy the dip, or the market should pull back here. You know, everyone that was stuck in maybe longs in here are trapped and they want to get out, and we're going to push back down and test the lows. So I'm hoping that at the very least we can come back and retest the lows today. Not today, this week. And my 66.40, I have a bear call spread that is a 66.40 by 66.60. And I have a portion of my broken wing butterfly, which is a 66.40 by 66.55. So right now, both of those trades, one is worth, this one's worth about $3.25. This one's worth $2.90. I rolled them each, so it's now $3.35 and $3. I'm not trying to go after a full credit profit here. What I'm trying to do is just get out of these trades because this one paid me. This one was a $500 profit trap, and this one was a $1,000 profit trap. So I'm up $1,500 on these two trades. As long as I don't lose anything on these bear call spreads, I can make right now up to about $650 as an additional bonus, right? Which obviously wouldn't suck, but I'm already up $1,500. So I'm not trying to, have these things. They've got to be a little 66.40 by the end of the week. If they're offering break evens or partial profits, I'm going to take it. Okay. Had I not done anything on Friday, I would have made $635 or $630 last week, in addition to the 1,500. But I mean, did I know the market was going to fall 3% and blow through, the 200% ATR to the downside and blah, blah, blah? No, I didn't. It felt like, there was no floor, and it certainly proved to be the case. But I thought it could be one of those days like here, excuse me, the market was down so much, so aggressively that what if we just came back up for the day and we were greater than 66.40? Well, I was taking on about, $1,300, $1,400 of risk in those trades. So I thought, everything's falling. I'm able to roll it, kind of survive through it. So that's what I decided to do. Okay. 45 and 50 looks like 225 credit. 65, 45. I mean, maybe. But we're going to be opening up, we're going to open up here. We're opening up 1% higher. So we're opening up at 66.20 something today with a plus or minus 80. That I don't think there's any way that trade's going to be showing profit today. A 66.40 to me is going to be in the noise. The market could certainly go back up, come back down. I hope that it is a high, low, lower high. We either come back down to test the lows and fail, or we actually poke the lows and fit, the SPX move that I've been waiting for very patiently. And the fact that it almost hit it in one day was kind of crazy. So I go back to, again, some of the simple technicals, which is, okay, we finally rolled over for a bit of a sell-off. If this is the, bottom of this thing instantly V bottoms to the top side, you just have to accept this market is nuts, and it's just crazy manipulated if you see stuff like this when you can have, a tweet and then a pivot that market just overreacts and then reacts, and it's still just this eager by the dip. But as I unpack some stuff over the weekend, data-wise, content-wise, we're still in a shutdown. This shutdown is now lingering into a third week. It doesn't look like we have U.S. data coming out this week with PPI, CPI, and non-farm payroll getting kicked again. That being said, we also, I believe, we have a pay cycle for government workers this week that if they are not paid, then I don't know. I just don't see the market loving this stuff, So it was nice to see a bit of a volatility shakeout. I hope there's more to it, just because I want to be somebody that can position for dips and support. I think the market is very well supported. Anywhere in here, very well supported. But because we dropped so aggressively, could it fall to, a 23% pullback or 30% or previous? Of course, all these levels are very realistic, right? having to pull back towards the 200-day moving average. Very realistic. So we will see. Reverse iron condor, maybe, because again, reverse iron condor is probably going to take into account that the IV is so much higher. We might have to go like 25, 35, 45 wide in order to benefit. If that is the case, though, great trade, right? If we can go 15 or 20 wide and we can still get 580 or 590, then I think that's a great trade for today. So we'll see. Let's price it out. All right, let's go. What is open for trading today for Columbus Day? Okay, stocks are open. Retail stores operate normal business hours. So stock market's open. I believe bonds are closed today. Forex is open. Crypto's open. Bitcoin had a pretty wild weekend. It was down a ton on Friday. This is all Friday. This was a awful Friday. We came back down. We didn't break any lows. Not saying that we can't, but interesting the risk off tone. This didn't really do anything to gold though. Silver, fresh highs on silver, ridiculous. Gold, fresh highs on gold, ridiculous. Why? Well, apparently this is what risk off looks like now. Okay. I just want everyone to be realizing, like, look, I've had some crazy good gains in gold and silver. I am out of these positions. I did buy back into silver. I'm putting in positions on CEF like we talked about last week. I am going to dollar cost average. I don't know what, again, same thing with this whole correction that we were anticipating for a couple of weeks. I don't know what the catalyst is. I don't know what is going to pivot gold so hard to have some type of technical correction. I keep saying it could be something dollar related. If the dollar catches more of a bid to the upside, this is one trade that nobody really is playing right now because everyone is short the dollar. Everyone's assuming this debasement trade is here to stay and gold is up and silver's up. But the dollar catching a bid could certainly turn gold and silver at least down in the near term. So I'm totally happy just placing positions, dollar cost average levels, and not chasing gold and silver. It's obviously frustrating that 4,000 would seem to be a round number. Nobody seems to care. It's 5,000 right now. It's a 40.91. Silver $50. We're at all-time highs with 50 not really acting as any type of resistance. So it's just, I get it. I just don't feel comfortable buying either of these two at these highs. So dollar cost averaging, look at your moving averages, taking a position to kind of reestablish a core play on gold and silver again. Okay. Rob says, will you post the high and the low today? I'm not in a butterfly in VIX, Rob. I never was. That was a synthetic play. It wasn't a butterfly. VIX was just a long call, but I did it with a synthetic. So our trade on VIX, let's take a look at it today. VIX, it was up like maybe $200 to $300 last week. So VIX has retreated a little bit. It's up 22%. I'd like to see if we stay a little bit more elevated in the 20s. Maybe this gets up to a couple $100. So we'll see. I mean, I don't know if this is going to get worse. All right, let's get this stuff priced out. So today, SPX, we're opening at 66.28. Working orders, those are my that's my broken wing, butterfly, and my bear call. They're trading for 1060 and 810 respectively. Again, it's going to be right in the noise today. Plus or minus, now it's 40 points instead of 86. Big difference. All right. So we opened. I'd like to. All right. Here's the good and the bad. We have the center price here. I think we need to consider with the VIX at 20. We need to consider like a swing. I'm going to position off of this. I kind of hate to do this just because it's so common just to go like previous day's close because the market is, based in futures market. We kind of don't have any gaps here. But because this is a huge gap, we're up 1.2% at the open. Okay. So here is our open way up here. I want to go plus minus on the day. Let me change my ATR levels. We are still technically in negative gamma as long as we're staying below 35 or 40. So 66.35, 66.40 is our positive negative gamma pivot point. The bigger gamma of the day is revisiting the 65.50. Let me get some real-time gamma here with my dynamic trend and see if those levels get any bigger. Okay. And again, like all this stuff it's very tricky right now, right? I mean, we opened up with such a big gap. We're already up to the 100% ATR. Okay. So what do I want to do? Sell the 150, sell the, it's like, we have to stay out of the way. I think if market makers are going to do their job, this is the plus or minus 37. We kind of take advantage of that and don't risk a ton of money today. Okay. If we let the trade work out mechanically, awesome. This is probably what I'm going to do. I might go out like 45 or $50 and see if we can get something positioned on that. We can go out to something delta neutral. Let's take a look. Okay. So if I look at like let's see 10 delta here. I'm going to go 10 delta on each and see what happens. Let's go 10 delta. If we go over $1, 80 cents, 90 cents. That's pretty good for a 10 delta. If I go puts, 90 cents. So that's a 12 delta call and 11 delta put for 85. Looks like it's going to require me to go a little bit higher up on the chain. All right. 60 and 55. That's, I mean, if we come back down and revisit the lows, then that's going to be in the way. So this upside gamma 67. Let's do this. I don't love forcing a trade, considering it's just kind of a wild card day with how much volatility we're actually going to see. I mean, mechanically, are we going to have like a boring Monday? Maybe. I have no clue, man. So look, I think officially today, it's like you shouldn't have to force a trade. You never have to force a trade. But I'm saying officially today, this is going to be a wild ride. So I don't really want to say like, oh, this is it. This is the bear move. We got to sell. It's like, look, this market can recover just like it did right here. But if we gap open and all we do is fade down and revisit lows today, I don't think the lows at 65.50 are necessarily safe. And I certainly don't think that our trade based on the deltas right here at 11 delta at 65.60, well, that's in the way if we come back and revisit the lows, right? But what we would need is we need price to basically stay choppy for us for maybe 30 to 60 minutes, and we should be able to get paid, right? But there's a lot of sticky volatility today. I will say that. So I've got 90 cents on a 13 delta. This is an 11 delta. On the put side, we probably have to go up a little bit. That's a 15 delta put at 70 and 14 delta here. All right. I'm willing to take this trade and see if price will cooperate this morning for us. 110 or 105 fill on a daily profit play. So pending at 110, I'll put it in at 105. Hopefully that will fill. At least $1 should fill today. I'm going to try to get filled for $1 and let it sit. I'm not going to take less than $1. I was hoping for 105. All right. I just got filled for $1. Trades in 66.85 by 90 on the bear call side and 70 by 65 on the bull put side. So this is coming in Telegram right now for members. New trade, SPX. Today's the 13th. So that is the 85.90 call. And the 70. Okay. So trades in Telegram. Update here. $1 max profit. I'll go for an 80-cent or 70-cent debit for profit. $4 max risk on the day. Trading small. given the uncertainty and high volatility. Okay, so I'm trading small. Let's see what we get. But it is Monday, and usually Mondays are pretty responsive. So there is daily profit play. There we go. And we'll see if this responds. I'm going to set a take profit at, I'll go 70 cents. See if that gets us filled for profit this morning. All we need price to do is, after such a wild ride last week, it just kind of opens here, chops around, and doesn't really make any clear direction. That's all we need. Okay. If we are, I'm curious on a fib side here. Let's take this high to this low. We pulled back to this 38%. And we haven't closed above it yet. So it wouldn't surprise me if, this open here, either we have to chop around this 38% and we either come back to retest the 50% zone, or this is going to proceed to retest the lows. If the market's just like, yep, just flush it up, get out of these trap positions and try to push back down to the lows, so be it. But if it's choppy today after getting caught off guard with basically a high VIX, no zero DT flows as far as the positive gamma, this thing went into negative gamma very quickly on Friday and stayed there all day. So we are still in negative gamma right now. Okay. All right. So trade is in. And let's see if, even through this crazy volatility, daily profit play, again, we can benefit from crazy. We can benefit from high volatility, let the market makers do the job. They have to do this stuff, right? Market makers still have a business to run. They still have to be delta neutral. Okay. And even through all this crazy calamity, they've been doing this stuff for 50 years. This isn't the first time they've seen a wild and crazy day. And they still have to, go in and manage risk and create flows and liquidity. So let's take advantage of that. All right. So tracker is officially in. Trade is in. Trade number 504. Putting this in the tracker right now. 1013. We opened up around 66.30 today. And we'll see what we get. Ernesto, just double check your legs, man. I don't know. That's way too much credit. So unless you flipped them, did you have like calls and puts on the other side? Just double check the legs. You should be looking at a bear call spread higher than current price and a bull put spread lower than current price. Selling the 67, my fault. It's 67, right? No, I'm right. 66, 85 by 90. Oh, the put side it's 65. My bad. Sorry. It's 65s. The put side's 6,500. So it's a 65.90. That's my fault. And the 65.70. Dang it. So 65.70 and 65.65. There it is. Yeah, I mean, I went to the option chain. Here's my 65s down here. So 6,500. So now it's correct. 85 and 90, 66, 85 and 90 in the bear call, 65, 70, 65, 65. That's my bad on the typo. Sorry. So 65 there for $1. Yep. So we got it. So this is my expected move. Here's my option chain. This is my expected move in red. I've got a bear call spread above price, and I've got a bull put spread below price. As long as price stays inside this red zone, we got some profit today. Okay. All right. So John, Ernesto, Bill, you got it. We're going from 66.85 down to 65.70. Yep, there you go. Should be like $1.05, $1.10 probably right now. Cool. Okay, very good. So the trade is in, and then I've got the working order to close this thing at 70 cents. So we'll keep an eye on that. Anything at 20%, 25%, 30%, I'm happy to close for profit. So I'll keep an eye on this morning at 70. Should be looking good. I do want to do a quick review of my waterfall trades. So some of these have not closed out yet. I'm looking to close out a couple positions on SPY and QQQ. So Dow waterfall is up 26%. IWM waterfall is up 20%. Q's waterfall is up 71% and is up 58%. SPY waterfall up 78%, up 65%, and 15%. SPX waterfall. That one is down just a couple bucks. This one is down just a couple of bucks. These are, pretty safe, by the way. This is just the high volatility push we saw from Friday. I mean, price would have to come down to 5,600 to threaten that trade by the end of the year. 5,650 to threaten that trade by the end of the year. Unlikely. I mean, it's crazy. It's like this trade is a 96% chance of profit. I'm down $10. We just need time. This one is up 7%. This one is break even. This one is down 10 to $15. So we just had a lot of volatility. That's really what it was last week. It's just a ton of volatility. So all these are pretty decent. I took this trade. This would have been the trade I put in Friday in class for waterfall income. Give me 1 second. So like I said, I'm looking forward to today's waterfall income class. We should have a nice lined up trade for a strategy one. We probably don't have to go nearly as far away because we already had a decent correction. So I'm probably looking to position around that like 6,000 handle and tighten up the risk a little bit for a strategy two. And I'd still like to see, if possible, I'd still like to see a strategy one pullback, which even with this 50-day moving average SPX, we still haven't hit it. Even on SPY, we haven't hit it, right? So one of the most liquid ETFs, crazy high bar count, we still haven't hit this 50-day moving average. I again, for my technical side, I hope that we hit it this week. Okay, so just some simple price action, high, low, lower high, and the market kind of tries to come down and retest the lows. Now, this could be really simple, and this could be over very quickly. This high, this low, a pullback that retests the lows. All it has to do is poke that 50-day and then bounce from there. And if we go back up to the highs again, that is okay. That is a satisfactory pullback given that it's been so well supported by the 21-day moving average. So pulling back to the 50-day would just be retesting this kind of 2 to 3% correction. But we'll see how price action plays out, right? If we go down and all the way back up again, then I think we're going to come back down again. I think this is now like a bit of a chop zone where I hope this isn't like the bottom. If this market goes higher, we're hitting 7,000 by the end of the year, and all this was a flashy one-day move, then okay, I guess that's what I have to accept. But I think that this at least shows there's something a little uglier under the surface, and maybe this is just the S&P kind of immunity system where we had high concentration, very few stocks performing well. We had market breadth that was waning at these all-time highs, and it just took one bad event to kind of throw this market for a loop. But here we are. But today's price action, pretty cooperative, right? After a wild and crazy day, this is also another reason that market makers are so good at their job. craziness, and we are getting nothing today, which is totally fine. And what do we want nothing to be? A win for us in daily profit play. And I'll see you tomorrow. Okay. So we don't have to sit here and embrace like, what's the market going to do all day? Who cares? If it cooperates for us in the morning, get paid and move on. Okay. But what was kind of insane was I don't think we had a 1 or 2% pullback. We have not had a 1 or 2% correction since like August 1st this year. And this day, like Friday's move, was one of the largest moves we've seen since April. And we all know what happened in April. Crazy stuff. Okay. All right. So I'm curious, based on the close. I mean, I would just silver's SLV at 47. Good Lord, dude. This thing is ripping, man. Gold and silver are up. Silly. Oops. SPX. So our price action is looking good. Daily details are in for members of Mercedes. If you have my daily profit play service, Telegram channel, trade went out this morning just after 9:30. Waterfall income trading session today at 11:30. Trade will go out by noon. Master or the crash insurance. I'm going to look to see if the market will go down to retest that 50 or possibly retest the lows and VIX stays elevated. And then I might look to close out my November VIX. This one's up about $50. I want this to be up like $300, $400, $500. For me to close this for some profit, I want this to actually feel like it matters. You know, I'm not saying that $50 doesn't help, but the whole point of this trade was if we get a VIX into the 25 or 30 run and it happens quickly, that I want this thing to be up to, you know, maybe $200 to $400 of profit. Because this initially, I think, was like a $380 risk. So if we can get that or more, at least it kind of is the purpose of a hedge. Okay. All right. So far, price action's pretty good. With our daily profit play, we're probably seeing a small winner right now. It's up about 10%. Let's try to get 20 to 25. I got it set for a 30% take profit. 80 is probably smart. 75 to 80 is probably smart. But I think 70 cents is doable for the day. Okay. And elsewhere, I want to take a look at what's moving and shaking right now. Yeah, we know Ray Dalio. Yeah, I mean, midterms are probably going to feel like a civil war. What's going to be the hottest topics for the midterm elections next year? AI is coming for all your jobs, and it's a K-shaped economy. Like politically, that's what everything's going to be about in 2026. So, do you feel like things are better for you or things are worse for you? If people feel like things are worse for them, they're probably not going to vote what's going on right now. You know, their only way to feel like they got a voice is maybe voting the other way. The fact that this New York mayor election is, you know, bringing in like some crazy, I mean, it's such a terrible word, but it's like bringing in socialist policies. It just shows there's interest. This might be one of the biggest galvanized bases of like 18 to 30-year-olds that, you know, we've ever seen in this country as an election. This is happening globally. You know, it's like people are upset. And you got Bernie Sanders that's saying that, you know, AI is coming for 100 million jobs. It's like, okay. I mean, that's like 50+% of the workforce. So I get it. Like there's going to be some displacement, but this narrative of just like, it's extreme this, it's extreme this. If you are a trader, you are essentially, I am at least, I'm a centrist. I don't care about the right and left. I think our political system is a joke. I think it's a circus all the time. It is super noisy. It's never been more sensitive in this country than I think we've had it in the last, you know, decade. But it's stuff we have to acknowledge. Like politics have drifted into the markets in a big way. I mean, we have the government that's like taking moves like a hedge fund. I mean, they're taking stakes in companies like an activist investor. And it doesn't seem like it's anything other than corrupt. Call it what it is. But hey, If you're riding MP stock, if you're riding Intel stock, if you're right, I mean, all these things that have been blowing up to the positive side these last couple of months. If you're riding this AI, you're loving this stuff as an investor. But if you're not invested, it just feels like you're getting further and further behind. Yes, gold is up, and yes, silver's up, and yes, there's this talk of debasement. But now that's becoming mainstream. That doesn't make me nervous. Debasement becoming mainstream makes me nervous, right? This has been being talked about for years, but now it's becoming mainstream. So I just want you to be careful that I think this is not without some crazy rocky volatility ahead, right? But today's heat map, I mean, big response in what was last week, obviously. If we go to 1 week performance, this was all because of Friday. Everything was just trashed on Friday, and at least today, live, we are back in green on a lot. So was it immediately buy the dip today? I mean, what's interesting is at least in stocks. I mean, if you're buying the dip in stocks, you have to go out to Friday. If you're buying the dip in the index, if you bought a Friday close at 65.55, you're freaking crushing it today. And I'm sure that happened for a lot of people, right? Buy the dip. Well, it was a good dip and it gapped up 1%. So you're closed out today. But if you're waiting this entire week to see if stocks will put in a bottom, that doesn't make me as comfortable. A 1 day pop on Tesla, 1 day pop on Nvidia and Broadcom. I mean, they've got to hold this all the way through the week. Maybe they do, but anyway, we'll see. How can one compete with China if the U.S. does not defend its national? Yeah, I mean, I'm not saying anything about that, Joe. It's just like how noisy this is. Like, look, this defending your national interest was this is all the commentary here. And then what happened after Liberation Day? Radio silence, right? This is our US China trade pause, right? This is the trade war pause. Markets have been up. There's been nothing about China in the last 5 months, which is how this market ran as hot as it did with limited corrections. Trump didn't say a word about it. And all of a sudden now we speak up. That's all I'm saying. This pivot of like, this is terrible news. This is positive news. This is terrible news. But we'll see how the market behaves. I get it. Like this is big stuff. I mean, if the US does not want to fall behind, it's going to have to be all systems go. We need all the energy we can get. Our demand is exponentially higher than supply right now, and it's proving that we are behind in all this stuff. We have a 2 to 4 year political cycle that doesn't really allow us to go all systems go on anything, right? What's our one bipartisan support? Raising the debt ceiling and having a big military. Everything else is you did this, we're going to do away with that. You did that, we're going to take that away. We're going to do it all our way. And it's just left versus right, left versus right. And it's awful. So, I mean, we have to do something for the greater good. I think that, there are a lot of things that come out of this that could be great for the US and how it's positioning for the future. But, geopolitically, I think there's a lot of geopolitical risks in what we're seeing right now. So, and I don't know if it has to be positioned like it's us versus them, if it's US versus China, if it's West versus East. I have no idea. All I want to do is trade it. So I'm hoping that we don't have rocky roller coaster rides of, this market bubbles to 50+% gains or it freaking crashes 50%. Like that's not fun, right? Everyone can make money in a bull market. I call them bull market geniuses. Everyone looks good when the market's like this and you're outperforming. And then you have a 2022 event and everyone's busted. You have a, event like this and everyone's busted. It's like, I've traded through this crap. I know this is not normal. My job is to survive up, down, or sideways. So policy aside, politics aside, you just got to trade. So we'll see. But this is also the perfect technical setup for weakness. This is a perfect weakness window that we have not had based on typical market seasonality. Okay, I will show you with some of the market seasonality. Give me a second. Let's go seasonality and monthly. So typically what we have in the markets is some pullback window, right? So red is, let's see here. So we have the histogram is 10-year averages. Okay. And we have September, October is usually the biggest weakness window. Well, September is one of the best Septembers we've had in a long time. So that kind of pushed the weakness window into this October, November arena. So September was not a bad month at all. In fact, it was crazy over 4%. So that just opened up this weakness window. And again, it's just seasonality, but now it's October to November. So if we have this window that is enough so that we see like a 3% correction, a 5% correction, maybe a 10% correction, well, that does hopefully mount a late season charge. Okay. If all we had is Friday's pullback and this market is up to, all-time highs again, and that's it. It was like a blip on Friday. Trump had a bad day, got really vocal about it. The market overreacted and it's right back up to highs again. Then it just makes me way more cautious going into the end of the year because we really shouldn't be having the market that just every 1%, every 1%, every 1%, you buy the dip because it gets so far stretched and so far technically overdone. It's just going to cut through all of those supportive levels until it gets to the one it needs to get to, which eventually is going to become like the 200-day moving average, you know? So we'll see. But this is a wrap. The seasonal weakness that we typically see in August, September, October, it certainly got kicked since September was not a bad month at all. It got kicked into October and November. So we got a taste of it on Friday. Market's obviously responding bullish with this gap up. Where are we technically? We are now. I mean, so negative gamma, by the way, is at 66.65. So if this market finds this negative gamma zone that is right around this 50% pullback zone, does it pull back to there? Have some rejection? Looking to see if we can benefit from that price action today. Okay. Our threat level is we did the what were our levels? 85 and 90. So 85 and 90, I'll put a couple lines in here. 85. And then we have the 70 on the downside. Okay, so I'm going to change the color of this really quickly. Let's go. Guess I'll make these green today. All right. So for our daily profit play, I'd like to see price stay less than this 85 and above 65.70. Okay. And we started out with about 15, 20 minutes of choppy price action. It is getting a little bit more directional. When we had a 20, I mean, we're 60 points, by the way. We're 60 points out of the plus minus at 37, 38. So when the market opened, we went from 80 plus points plus or minus to like 37. We're 60 points out of this. If market makers do the job today, we should be fine, right? So up a little bit, maybe a stall here around 60 to 65, coming back into center. Maybe today's just a big fat gap where it's like high, low, right around that 50%. Make the market decide, right? Here's a high, here's a low. You're right back at equilibrium. Then the market has to decide. Is it back to the top? Is it going to retest the lows? We'll find out. We'll find out this week. Okay. All right. Let's see how we're doing. Down about 20 bucks right now. No big deal. Bull call spread, silver. Okay. Oil at 59. Still watching that closely. Okay, we'll keep an eye on things this morning. I need to stay below this green line, above this green line for the day. Hopefully that is the case. I'm not going to get, I'm probably not going to over trade and try to get super frisky on like adding more trades in. Um, but I mean, again, I trust the process that even with the zaniness of, look, we made money Friday, right? We made money Friday. If we can pull out profits today, that again just continues to prove why I do this service daily profit play, that you can trade this stuff every single day. You know, never settle for a mediocre trade. Pull in credits you're comfortable with. Don't take a ton of risk, but we should be able to win close to 90% of our trades or more. It's not going to be perfect, but even through the craziest conditions, this strategy, it works. You know, even this, it's like we don't have any news this week. I mean, Powell speaks. Okay. Do we have inflation data this week? Probably not. Do we have non-farm this week? Probably not. You know. So anyway, I do want to see something just for fun. If I did a SPX reverse daily profit play, I'm probably not going to take this trade, but I'm curious on how wide would I have to get. So if I did on the 66, these are going down. So if I did like the 40 by 45 and the 60 by 55, so 20 wide, I mean, you're getting 40 cents to, well, that's not right. That's better. So I can go 20 wide here and get over $6. That's not bad. If we're going to have direction, I mean, getting 580, 590 to $6, that's not bad. I just wouldn't want to go, way higher than that. I wouldn't want to have to go to like, 25 wide, 30 wide in order to get $6. I think that's way too wide of a trade with the kind of average daily move. So anyway, we'll see if our premium selling does the trick. So far, we need price kind of hover around like 66.30, 66.35 will be fine. And we need time. So another, maybe 30 minutes, another 60 minutes, we are probably going to see some profit if prices still cooperating. I have the 67.10 and 6700 put from last Friday. Why did you roll that, Ernesto? What'd you do, man? So let me ask you a question. When price on Friday closes at 65.52, did you think that today that trade was looking good to come all the way back to 67.10? Okay. So what's the plan? You probably can't roll it today for another credit. You probably have to roll it for a debit. If you roll it for a debit, you're just digging the hole deeper, which means more risk. So if the trade was rolled, it's like you're basically giving it a chance. And I don't know if you rolled it on Friday for a credit, try to keep the trade alive, but getting back to 6,700 today, that's a lot to ask. Remember, zero DTE is really, we don't have the luxury to extend these trades. I've rolled very few. In fact, I can't even think of one that I rolled in a 0 day. Okay. The whole reason I take zero DT trades is because I am accepting the risk as is. The trades that I've rolled, waterfall income out 60 to 90 days, broken wing butterfly out 30 to 40 days. We've got time in those trades. There is a plan B on those trades, but 0 day, it's like you're not really given the luxury to roll, because when you start to roll it, you're pretty much going to roll for I hope I can survive this trade. I've got to be right immediately. And if I'm not, I'm just digging the hole deeper if I'm rolling it for a debit. So if it's my trade, I gave it a chance to roll. I'm hoping that you rolled for a credit on Friday that reduces the risk. But I would say right now you're kind of stuck where 67.10. I mean, hope for the best. If price rips all the way back to 67.10 today, then you'll be fine. If you're going to roll it for another credit, then you can survive that trade and give it another day. But right now you're going to be rolling it for a debit because you're 50, 60 points down. Yeah. So that's good. I mean, you rolled it for a credit, you got a 10 wide and you got some credit on it, so it reduces your overall risk. But I just think if you have to try to roll it again to extend the life cycle and you're rolling it for a debit and digging the hole deeper, it's just tough, man. Day to day, it's like the option chain it's so sensitive day after day in a 0 day environment. The gamma exposure that you have, the gamma sensitivity, it's crazy. So it's just don't make the problem worse. I think that's my thought is don't make the problem worse. Don't dig the hole deeper and accept that there was risk initially. And if it doesn't get back to 67.10 today, take the loss. Because I mean, look, you can sit on the trade. Maybe we sniff out like 66.80, 66.90, maybe. But would that be enough to give you a roll that's going to be break even? Can you roll it for break even? Maybe survive it for tomorrow. All I'm saying is I don't want to take on the extra, 50-cent debit, dollar debit, whatever they're going to say, roll it for. It wouldn't be worth it if it's going to be digging the hole. Okay. So again, if the market could come back up to 67.10 and you got a chance. But if it doesn't, you got to lick your wounds and move on. Okay. All right. So while we're waiting for daily profit play, let's see if this thing will hit our profit target as we're talking. We're sitting around break even right now for this morning's trade. I want to jump in. So today, I just had a 2-day workshop on this last week. We did strategy 1, strategy 2 on waterfall income. We'll have a live session today at 11:30 a.m. to trade. I fully intend to be placing a trade today on waterfall income. Looking forward to it. Actually, it should be perfect because we've gotten a nice little volatility move, and our volatility index is still around 19. Yes, it's retreated. Okay. But unless we're going to have like this one-off volatility move, I mean, are we going to stay somewhat elevated for at least a week or two? I still think right now with the government shutdown that we're going to have somewhat elevated volatility. This was kind of the flush to the volatility system. And if it stays elevated versus immediately comes back down to 16, I think that we're in a level right now that vol suppression is not really as popular. If we're seeing day-to-day negative gamma, be careful because this market isn't putting in those sell level supports like sell put, sell put, sell put. Those flows aren't as prevalent when you're in a negative gamma environment. Does that make sense? So that being said, waterfall income for today. We talked a little bit about this last week. I had a 2-day workshop on it that I'll talk about today in class. 11:30 a.m. today. I'll type this in the chat or on the screen here. So 11:30 a.m. 11:30 a.m. Eastern time. This will be a live trading session for waterfall income. Okay. So if you'd like to join me, love to have a new group of students. We do this every single Monday like clockwork. One of my favorite strategies, one of the strategies I put in every one of my accounts every single week. All right. So we've been in the service for over a year now, and we are winning 94% of our trades. Our average return is 20%, including our winners and losers. Our average hold time is anywhere between 11 to upwards, and depends on the strategy. 11 days is average, but we have hold times as much as like 60, 70, 80, 90 days as well. There is a phenomenon in this market since the invention of options in 1973 that we can use options as a cost-effective way to leverage, a cost-effective way to participate in the markets, and basically dollar cost average, and do this every single week like clockwork. Bull markets are way longer and way more sustained than bear markets, which even through this service, we've seen the testing that I've done here. I would put this strategy up against literally anything that anybody would show you ever. And I put the strategy up and say, I think I've got one of my favorite strategies. So if I am going to teach somebody that's new to options, what a great way to get started. If I'm teaching somebody that's been around, that's been struggling or frustrated, what a great way to start turning the corner and kind of hit a tipping point where you're starting to make some more consistent income and enjoying the process, and it's not high maintenance. Okay. It's one of my favorite strategies. All right. So is it perfect? No. 94% winners. It's not perfect. There will be losers. We do have defined risk trades. My job is to find an edge in the markets. I've done that here with waterfall income. But if you're not to the point where emotionally you can handle loss, then you need to trade a demo account. Build the process up. Trades that are small enough that a loss and a win feels about the same. If you get to that point emotionally, you're in a good place. That's what it's like being a trader. Make it feel the same. Okay. Appreciate everyone being here today. As always, creeping up on 26 years in the market, trade indexes, stocks, options, futures, shorts, cryptos, tens of thousands of hours spent trading the markets and teaching other traders how to trade. I've certainly seen a thing or two, but what's happened over the last few months, what happened on Friday, what happened this year, what's happened the last 10 years has been pretty crazy. Governments around the world become more reckless than ever. China backstop their property markets and their stock market with aggressive stimulus. The Eurozone's come off of austerity for the first time in a decade. They're spending money as well. And the U.S., we're spending it like there's no tomorrow. There's a 6, 7, 8% deficit spending on the U.S. This is all driving that narrative of the debasement trade. So this inevitable outcome, probably stickier inflation, if not a higher wave of inflation. We're being told that we have to have inflation in order to grow our way out of this issue. It's not fun. This is the K-shaped economy, right? So we've had this huge run in inflation. People are seeing probably, paycheck to paycheck, month to month, family's financial future feels like it's more threatened now than ever before. You're going to see this a lot in 2026. This is going to be one of the most contentious midterm elections I've seen in a long time, just because people feel it. Life is more expensive. I get it, right? But pay close attention, because if we can have a way to trade, I truly believe this. There's no better side hustle to being a trader. This is a skill set that nobody can take away from you, and you can leverage these instruments in these markets, make consistent income, and hopefully offset or handle the rise cost of living, boost your retirement, build up your account, start winning some trades for the first time in a while, not giving money back. Okay. Hopefully we will see our 93rd, 4th, 5th, and 6th winning trade in the next 2 to 3 weeks. And we have over 100 trades slotted for winners in the next maybe 2 months. Okay. Before we get started, think about this for a moment. We're going to talk about some risk today that's up to $5,000 in risk. And those $5,000 risks per week will allow us to grab upwards of $1,000 and more. Now, I want to put this in perspective to scale this.